All right. So, first of all, you are welcome to this session. And one of the best parts of trading is what we're going to be looking at: risk management and psychology of trading. This is one aspect that once you know, you understand, it will help you to preserve and keep your account from blowing up. Now, when you talk about risk management and psychology, we have risk management, we have money management, but a lot of persons go into trading without even understanding this. Oh, don't risk more than 2% of your account. And then you said, okay, I'm not going to risk more than 2% of my account. How much is my account? $1,000. I put in $1,000 and they say 2% is $20. But how exactly will I know where to put my stop loss or where to put my hedge so that it will not go beyond the 2% that I marked? So, and because many people don't understand it, most traders don't know how much they are risking per trade. You just click buy, you click sell. You don't know how much that you are risking per trade. They only know how much they hope to make. If I can make $5, if I can make $10, but you just don't know how much are you risking. The only thing that you only do is to hope. I hope I will not lose this amount. And hope is not a risk management strategy. You know, we have this strategy, very important strategy that people always use: hope and prayer. Prayer and hope strategy. When the market is going against you, you begin to pray. You hope it will not go beyond this level. You begin to pray and say, oh, I hope when it's going, you lose $10. Hey, I hope it will not go beyond this. But how do you cut off this loss? So today we are going to be addressing this part. Number one, please take notes. What are we going to be looking at today? We are going to be looking at how to calculate your exact risk per trade. How do you calculate your exact risk per trade? Number two, how to determine the proper lot size for each trade. That when you are entering a trade, how do I know the proper lot size that I need to use? Number three, how to use the Forex calculator correctly. There's what we call the Forex calculator. How do you use it? So how do you use the Forex calculator correctly? And then the last one is how psychology changes when risk is defined. How psychology changes when risk is defined. You know, one of the things that I always share with people when people say the Forex market is very risky, and I always stand to be corrected, I tell anyone at any time that one of the safest business that you can do is the Forex trading business, provided you do it right. The safest. Now, someone who is, let's say, okay, I have a friend who had a poultry farm. In that poultry farm, he told me he spent close to 10 million naira in establishing the poultry and things. And you know, amongst our friends, we all celebrated him. Oh, everybody was wishing, I wish I can have a land like this. He even had a very good space for the chicken, for the birds. Then one day, he came into the farm and saw the birds, about I think he had almost 10,000 birds in that poultry, broilers. And then he saw almost 500 of them just lying down dead. He was, what is going on? What's going on? He called the vet. The vet people came, they checked. Before night time, another 1,000 has gone. As a matter of fact, before the end of the week, he lost practically all the birds. Almost how many million investments went down the trade. Now, in Forex, this cannot be, provided you follow the system. What makes people think that Forex is risky and they can lose everything is lack of understanding. Not lack of risk management, but understanding of risk management and money management. So we're going to be looking at that. How do you do it? How do you control the risk? Now, let me put it to you this way, guys. Please, if you don't understand the risk that you are exposing yourself and how to mitigate it, don't ever take a trade. If you don't know how you will enter the trade, if I say in this trade, I don't want to lose more than $10. If I cannot put it and do that exactly, I should not go into that trade. If you go into that trade, I tell you, you are just gambling, you are playing with your money. Now, how do we go about it? The first thing is you must know what your exposure is. You must define what we call your exposure. What is your exposure? The exact amount you are willing to lose if the trade fails. That is your exposure. What is your risk exposure? You don't just go, if somebody gives you a trade or you want to enter a trade, you want to look at whether it is an EA that is trading or you are trading manually, because every EA has a place where you are going to set. There's a place in the EA setup. If that EA is not having that setup, then that is not a good EA for you. So you must look at the EA. What is my exposure per trade? As beginners, your exposure must not be more than 1%. The risk amount will be the amount in your balance. Let's say your balance is, your balance is $1,000. $1,000. Your exposure should not be more than 1%. Now, because you are using an EA, and at times we always want the EA to have a breathing space, we say, okay, maximum, you shouldn't go more than 2%. That means if I have $1,000, 2% of $1,000, that is about $20. Guys, please, I hope you have a pen and a paper, because we're going to be doing a little bit of calculation tonight, and I need you to go along with it. It will give you proper understanding. Now, 2%, let's look at something like I always try to tell people. If you put in 2% as your risk, if for whatsoever reason the market goes against you and it hits you at your risk level, your 2% level, oh, what has happened? You've lost 2% of your account. Now, that means you have 98% left. That means if I had 1,000 and it hits me at 2%, 2% of 1,000, that's $20. Is that not? So that means I have $980 left. That's not going to kill me. That's not going to kill me. But look at what will now happen. Let's assume for whatsoever reason, as you are entering, the thing is hitting you out. As you enter the market, the thing is taking you out. I want us to answer this question. If I'm risking 2% per trade, how many times will the system hit my stop loss or hit my hedge before I say I've lost all my money? Can somebody just put it in the chat box? I'm just risking 2%. And every time I enter, the market hits me at stop loss. For this, I'll be using more of the stop loss than the hedging. Now, if it hits me at the stop loss, how many times? Can somebody just help me with the figure? How many times will I lose 2% for the system for me to say I have lost all my money in the system? Is there anyone that's showing us that? Anyone? Just give me the figure. How many times do you have to lose? 50. Thank you, Chubike. You have to lose at least 50 solid times. 50 times? If you have to trade and you lose 50 times, I will, even by the time you are losing 10 trades consecutively, I want to advise you, pause, don't trade again. Go to your village and appease the efforts in your village. Tell them that, please, get a run or not. Please beg them. Because what kind of strategy, even if you are gambling, a gambler has a lucky day, but you enter, every time you enter, boom, it is stop loss, boom, it is stop loss. It's not possible. It's not possible. Talk less of when you are trading a proper strategy. So what I'm trying to say is this: when you use proper money management, it will be difficult for you. It's not that you can't blow your account, but it will be practically difficult for you to lose your portfolio. Talk less of when you are using 1%. If you are using 1%, oh my God, that means you need to lose 100 times straight without any win at all for you to lose all your money. All right. So I hope you get that. So you have to understand that risk management, you must be able to compute. Well, if I want to stay long in the market, what is my risk per trade? So I want you to note that down in your notebook now. For every trade, I must note my risk per trade. If you don't define this before entry, you are gambling. If you don't define your risk before you enter the market, you are a gambler. All right. Now, having understood that, the next thing we want to talk about is stop loss and position sizing. Stop loss and position sizing. You see, there are different ways of trading. There are different ways of mitigating against risk in the market. You know, we talk about leveraging. We talk about hedging. Hedging, we have an EA that does hedging, and then we have EAs also that uses stop loss. Whichever one you use, the important thing is that make sure that you are protecting your account, that your account is protected. Now, Let me see. Let me see that if I can share my screen here. Let me share my screen here so that we can look at the what we call it, the stop loss thing, depending on the strategy that you are trading. All right, so let me bring up this. I'm going to share this with you now. Just a moment. Let me share this now. Okay, please, an understanding of this part will help you a great deal. It will help you a great deal, guys. Okay, all right, so let's look at this. I'm sure you can see my chart very well. What's this one get up? All right, let's look at this chart. Okay, if I am taking a sell, in this market, I want to know, there are quite a number of persons that will tell you, the moment I enter the market, the thing just hits me at my stop loss. Please, you must understand the reason why I did from the beginning. I showed us higher high, higher low, lower low, lower high, and things, is that you'll be able to have a better understanding of this. See, guys, if you enter, let's say, in this market here, this price is going down. One of the reasons I know that is going down and it may further go down is because this is my EMA 200. This yellow line is my EMA 200. And note, I always tell people, if you don't know all this bullish engulfing, you don't know the SMC concept or the ICT concept or the MMC concept, whichever one, there are simple things that you just need to have understanding of in this market. If you are using an EA and you put 200, your 200 EMA is there, and your EA is buying, under the EMA 200, know that there's high probability that you are going to be losing that kind of trade. When prices are below the EMA 200, it is better for you to look for what? Opportunity to sell. And when prices are above the EMA 200, it's time for you to look for opportunity to buy. There are exceptional conditions where you are thinking of selling when price is above the EMA 200. And I mentioned it that when price has traded far away from the EMA 200, because price will always come back to the EMA. If I look at the distances far, if I get a sell signal, I can sell. Do you understand? But why do I even want to do counter trend trading? Let me just wait and follow the trend, because you can never say whether it will go. But guys, that's not what we are talking about. What we want to look at is calculation of what your risk management and the lot size. Now look at this. If I'm taking a trade here, let's say I take a sell in this place. Now I'm looking at taking a sell, this line that I drew my white line here. Now, why am I considering a sell here? Oh, because there seems to be a solid resistance around this area. I'm expecting that price will come up and touch here and then probably go down. Well, I'm not saying this is a trade idea. Now, if I put my entry price at this point, okay, this is entry. This is my entry. This is entry. All right. Just pay attention. We are going somewhere. If you understand this, these are the nitty-gritty of trading that we should just have idea on. Okay. So this is my entry here on this line here. This line here is my entry. Where am I going to put my stop loss? I want to put my stop loss at the last high. This is the last high. You see, some people will tell you, oh, put it just above this one. See, look at, let me put something here. I think for those of us that are new to this, it should not be complicated, guys. It should not be complicated. I want to get an indicator that we call the zigzag. That indicator So, okay, custom. If I come to indicators under insert, I come to indicators, I come to custom indicators. Under custom indicators, I think that's where I should see the zigzag indicator. Yeah, that's the last one here. Okay, this one get out of the way. Okay, now look at the zigzag here. It helps you to easily identify the highs and the lows. Oh, where am I going to? Where is the high of this one now? When I put the zigzag, can you see? It showed me instantly that this is the high of this trade. Now, if I'm going to put a stop loss here, guys, if you put your stop loss anywhere in this place, when you know that this trade is likely to be a selling trade, the only time that this will change from being a selling trade or a bearish market is when this high is broken. Look at, we are doing higher, lower high, lower low, lower high, lower low, lower high, lower low. So the likely thing that this market is doing now is trying to do the next lower high. That's what the market is doing. So simple. Look at it from here. Lower high, this, it took it from this side, lower low, lower high, lower low, lower high, lower low, lower high, then lower low. What does it want to do now? Lower high. And it will get to this point. So if you go and do a mistake, make a mistake and put your stop loss around here, oh my God, you cannot say, most likely, let me change the stop loss. Let's change the color of this stop loss to red. Guys, please understand this. Understand this. Whether you are using the EA truly will trade for you. But I told you, don't let EA determine your future. Do you understand? But for you to intervene, you must understand what you are doing. So let's say I want to put my EA, or I can put my hedging here. I can, because if you understand hedging trade, guys, if you understand hedging, you will, and you understand these charts very well. When you pick your trade, when the system picks trade for you, you can look at where is the likely place. If, let me tell you the truth, if you put your trade, if the EA enters for you at this point, there's high tendency that you are going to hedge, because the system might trade up to this level. If you use stop loss, it will hit stop loss here and take you out. If you use hedge, it might hedge you out here. Look at, let's do something. I'd like you to just see. Guys, these are things, please, you can watch this video over again. Look at something. I've just done something here. See, I've drawn a resistance line here. Wow, let me paint this one. Let me make it make it yellow and then thicken the line. Guys, these are things that professional traders do. They don't have time to explain all these things to you. As I'm talking about it, I didn't plan to explain. I just wanted to do stop loss and things for you. But I tell you, in reality, when I am trading, for me to determine my stop loss, I put a lot of factors into consideration. I don't just say, oh, my stop loss is 20 pips. My stop loss is 30 pips. For where? If that 30 pips is in the middle of a fair value gap, what will happen? Look at something here. Let me show you something here, guys. See, guys. See, this market went up here. Touch this line. I just drew this line. It's not a market that drew this line. But somehow, the market has invisible support and resistance that if you are not, it prints it every time. You might not see it. But once look at, okay, I think it's better this way. It's better this way. Guys, I want you to, guys, I wish you can understand this thing very well. It's interesting, guys. It's very, very interesting. Let's put the foreground, the bull arrow, the bar down. Let me put it as red. Let's make it very, very clear for all of us. The bull here, we put it as line, all right? And then the bear candle, we put it as red again, okay? Okay, so that at least you'll be able to get this. Now, I drew this line here. This line is considered a line of resistance. It's a resistance line. Anytime you sit down and you look at a chart, just look at, can I draw which line can I draw on this? Some people will tell you, oh, in my trading, I don't draw lines. I use this concept and this. Let me tell you, there's nothing, there's no straight jacket. ICT, some people will tell you, I don't use indicators. I just use price action. And since the time you don't use price action, you don't become millionaire. No, see, that's if you anyone that you use, master it. There are people that are using these indicators, there are people that are using support and resistance, and they are doing well. So just master, simple, make it simple. Now, I look at this, I drew this line here, and look at what price it came here, it touched this line. It came to this place, it did not touch the line, but look at this place here. Oh, because I've changed it. Okay, look at this place, this candle here. You see that it touched this line here again. It touched this line here again. It came here again. Look at it touched this line again. So I know the next move of this line, this candle, this price that is going up is where it's coming to touch this line, whether you like it or yes. It will touch this line. Whatever it does when it gets to this line. Now, why I know this market may still go further down is this. Look at this is my price 200. It's still above here. Look at this distance line, it's still here. So, and I'm talking on a 4 hours chart. This is a 4 hours chart. That means this is going to be a very strong resistance area. So, if price comes up here, two things. It might break this resistance line and continue to go up, or most likely hit this line, just like this one, and come down. So, if you go and put your stop loss, imagine I'm trading now, I put my stop loss here. Have I not just put myself as a suya bit for the something? You just put yourself in the direction of in the line of fire, like my military guy will say. You put yourself in the line of fire, because the fire, the line, this price will go up here to hit this resistance line, and you put your stop loss. Then you now say, anytime I put stop loss, it will hit me. No, that is not proper risk management. The ideal place for you to put your stop loss or to put your something to hedge, if you are using hedge, will be above the last high. Look at this is the last high, right? This is the last high. So I'm going to place it just above this high. Above this high, guys. I hope you are understanding it. Please, if you are getting it, let me hear. Just somebody, you can just say yes there. Let me be sure that you are getting this. It's not of any good if I'm rushing this and you are not getting it clearly. Please, I need you to understand this aspect. Just put a yes somewhere or mute. I'm not seeing the screen. But can
yes, you are getting it.
Let's all, if you are getting it, just unmute and say yes, you got it. Just
yes,
unmute and say yes, I got it. Just unmute and say yes, I got it, please. Okay?
Yes, I got it.
Okay. All right. Thank you very much. All right. If you are not getting it, please. All right. So if you are not getting it, please try go watch this video again. So I'm going to be uploading it now. This is a resistance zone, and the place I'm going to put my resistance is in this place. Now, this is one aspect of the trade. Remember, I am not in this trade yet. I set my entry here. Maybe I set a sell limit. Here. So price has not taken me in this white place. Okay. Now the next thing we will do is this. I want to know, because I want to set it in the EA. What is the distance between this line and this line? Between this white, my entry line, and my stop loss, or the place where I want the market to hedge. Now, this is what I'm going to do. Look up, guys. See this cross sign here. Can you see this cross? This one at the top left here, where they call the root crosshair. This crosshair here at the top here, you can see where my cursor is. Now, I will click that and come down here. You can see something like a cross now. I will come down here to where my entry point is. Now, from here, I will click and hold it down. I will click and hold it down and go up to where the stop loss is. Guys, here, the distance between my entry and my stop loss is how many? This is about 154 pips or more. That means that this is not a good entry anyway. Do you understand? This is too far an entry. For those of you that were on the training call the last time, I mentioned something that when you see a long trade down like this and you want to enter, please don't just jump into it that I know it's going to sell. I told us in that training that always learn to draw what you call your Fibonacci. Do you understand? Draw your Fibonacci from the top to the bottom of that long something down. When you draw it down, look at the 50% or the 61%. That is where your entry should be. The 50% or the 21%. That is where your entry should be. And I called it then, I'm just doing a little recap for you. I called it a premium price. When you are selling and you are looking to sell at your 50% or 61% percentile, we call it premium price. If it is a buy, we call it discount price. So now let me take my premium price, because if I'm using any example, it should be an example that you should be able to relate with. You should be able to do it on your own again. Now, this is our entry point. We look at the premium price. If price gets to that place, all well and good. If price does not get there, all well and good. There's no qualms. So here we put, this is our entry. And you know why I said it's our entry, why I chose it. I looked at this long from up of this trend to the down of this trend, and I now drew this the Fibonacci. The Fibonacci is giving me 50, 61 here. I want to put my entry at 61. This is where I will choose to sell this market. If it does not reach, fine. So from this entry point now, I will take my crosshair. Let me remove this fib stuff. I hope somebody is getting something here now. Let me remove the fib. This one, so that we are not having so much. Why is it not coming? Okay. Delete. Okay. So this one has gone again. This is our entry. I think our entry is somewhere here. This is our entry, and we had it as a white. We had it as white. Sorry. Okay. Horizontal. This is a white color. Okay. That is our entry. And I said you will always put your stop loss at the peak, and then you are going to give it a little distance above. Why are you giving a little distance above the very peak? Look at the peak here. This is the place, this line here. You can see where the zigzag line reach. You are not going to put it exactly here. You will move a little bit, like 10 pips above it. Now,
your screen is not showing
10 pips above it. There's what we call stop loss hunt. All right. So what I'm expecting this market to do is to have, this is a downward trend. I want it to pull back and enter this trade for me. And I said, I'm not going to put my stop loss just right on top of this. Look at this, on top of the place, the last price where the price hits. This is not where I want to put my stop loss. If you put your stop loss there, or you put it to hedge at that point, you know what could happen? There's what we call stop loss hunt. Because at the top here, there's a lot of liquidity. I explained it in the previous video. If you have not watched it, go and watch the previous video, that there are liquidity at the top here. So the market makers can run to come and pick up liquidity here. It happens. Do you understand? But then what I want to do is I'm going to put my stop loss like 10 pips above the last high. 5 to 10 pips above the last high. Okay. Now I'm not going to test this distance to this distance. What is the how many pips is it? So I took the crosshair here, come down to this place, and I will click on this, click with one finger and drag up here. Ladies and gentlemen, when I check it, look at this. You can see 3 numbers showing there. There's the number 2. 2 means 2 candles. The one we are after is the middle one. The middle one, you see 1147. 1147. You are going to ignore the last digits. What we are concerned is the first 3 digits for Euro pairs. If it's JPY pairs, you talk of the first 2 digits. But here we are looking at the first 3 digits, 114. What this means is this, guys. There are 100. The distance between my entry and my stop loss is what? 114 pips, depending on, my hand is shaking here, so that's why you see it's shaking and things. All right, but this is about it. Let's just say 100, and let's use 120. 120 pips. Now, guys, what is 120 pips? What is 120 pips? It now depends on the lot size that you are using. If I am using 0.01 lot size. If I'm using 0. Okay, don't let me jump into that. I want to show us how to calculate this. How do I know the lot size? Now, look at something. We have our entry price, because everything must be calculated. We have our entry price. We have our exit. This is our exit, the stop loss of where we want it to hedge. Now, I have a $1,000 account. I have a $1,000 account. So before I enter this trade, what is the lot size that I'm supposed to use? Oh, after all, you have a $1,000 account. You can use 0.05 now. You can use 0.03 now. This is what you need to do. So I'm going to stop the sharing on this and go to my mobile phone. I will go to my mobile phone. I believe you can see my screen now. Okay, so we're going to pick an application which you can download on your phone. That application is called Forex Calculator. Forex Calculator. Let me see on this. If you visit, you can go on Google Play. You can see that icon, Forex Calculator. Forex Calculator. So go on Google Play, Google Store. You will see this thing. See the sign. That's the one that you should pick. Forex Calculator. Now let me pick that Forex Calculator. Now I am trading Euro USD. I want you to pay attention to something. I'm trading Euro USD. My account is in USD. The instrument is Euro USD. What is my account balance? My account balance is $1,000. How much do I want to risk? I can say I want to risk 2% because I'm using an EA. All right, I want to risk 2%. If I say 2%, see what will happen. See, when I say 1%, can you see risk amount? Look at the place where they put risk amount. Risk amount showed 10. If I put 2%, risk amount showed what? 20. Now, stop loss in pips. Remember, we calculated the stop loss. I drew from my entry to my from the entry to the stop loss, and we drew how many? 120 pips. You remember on that chart we did one, so 120 pips. You see, this is not telling me the lot size that I'm going to use here. So I'm going to click on calculate. Calculate. Now, guys, look at something here. The system is telling me, it said, if you want to risk $20, the standard that you should use is 0.02 lot size. You can see the standard lots. You see the standard lots, 0.02 lot size. So this is the one that I'm going to use. If I put this trade, use this lot size, set my entry and my exit. Let anything happen. Let Iran bomb Iraq. I tell you, I cannot lose more than that $20 on that trade. It is so. With this, what will happen? Even anywhere I am, because it's the amount I'm ready to risk, I'm at peace. Now, let me show you why every trade does. You don't use the same lot size for every trade. So people say, since you are using 1,000, use 0.02. Let's look at something. I want us to look at something. This is Euro USD, $1,000. Let's change our pair to something like Euro GBP. If I change to Euro GBP and I calculate, guys, look at something. Look at something. Euro GBP, the same $1,000, and I said the same 2% risk, which is $20. When I clicked on calculate, the system is saying, guy, you cannot use more than 0.01 lot size. If I make the mistake to say, oh, when I did the one of Euro USD, he said I should use 0.02. So this one too should be 0.02. If I use 0.02 in this case with the same stop loss, that this thing is going to give me ×2 of my loss. I hope you get it. So lot sizing is important in risk management. Lot sizing is very, very important in risk management. So when you are looking at it, let's pick another pair. Let's pick something like a JPY pair, Euro JPY. We want to risk the same 2% on a $1,000. This, what is the lot size that we are going to use? Oh yeah, Oracle, tell us, calculate. If you keep calculating, do you see something? He said, if I'm to reach this same thing on the same 1,000, I'm to use how many lot size? 0.03. 0.03. The same amount of, but different pairs giving us different lot sizes. I hope you are getting something today. This is what a lot of traders don't understand in trading. You must be able to, this will give, if the thing hits you at your stop loss, it will be that exact amount that you say you are ready to risk. So, ladies and gentlemen, what am I saying? Understand how to do your position size. Now, look at something. Let's do something. Let's say I enter that trade and maybe I entered it, my stop loss was not much. Maybe my stop loss was like 20 pips. You know, this stop loss is 120 pips. That means by the time this trade, if I enter into Euro JPY, and this trade goes 120 pips against me, I would lose how much? $20. But do you know that if the stop loss, let's say the stop loss is 20 pips because I got a very good entry price and I put my stop loss at 20. If I calculate the something to use, the lot size, can you imagine? He said I should use what? 0.16 lot size. 0.16. Somebody would have said, you are over trading. No, I'm not over trading. If you put your own at 0.03 lot size and you put your stop loss at 120, and I put my own at 0.16 lot size and I put my stop loss at 20 pips, is the same amount that we lose. The only thing is that it will hit me, because my own is 20 pips, it will hit me earlier. It may not even hit you at all before it reverses. Guys, I want you to sit down and just go over what I'm saying here again. Because my stop loss is short, I can use a higher lot size and still risk the same thing with you that used AI. So at times, when you see somebody you see somebody's trade, you see the person is trading $500. Let's do something here, guys. I want you to look at something. When you look at somebody, let's say my account balance is $500. Ordinarily, what will we say? If you are trading with $500, use 0.01. Don't use more than 0.01. Is that correct? Now you are becoming a professional, you know that that's not correct. So why is it not correct? 500. I have done my analysis and I know that 20 pips, this I've given the market gap. I've gone to the high. I've given the market gap. So I know at this level, even if it hits me at that, it's just $20. So I put in 2%. What's 2% of $500? That's $10. What loss size should I use? I click on calculate now. The system says I should use 0.08. 0.08. Now, listen. If you are trading with an EA, now that EA has given you, just like the hedging EA that we are using. The hedging EA, you have put distance between the hedging point where it should hedge. Of course, we say don't use more than 0.01. But if you are not using the FIBO, you are using the fixed lot size. I tell you, you are shooting yourself in the leg. If you are using 0.01, you are under trading. So for each pair, I want to calculate the distance to my hedging. Once I know the distance to my hedging, it will tell me the lot size to use. If it goes in my favor, that means if it goes 20 pips in my favor, I will have won this amount. 0.08 is a lot size that I should use, even though this is $500. Guys, I hope we get this. So this is what we mean by lot size. So, and you must know that it is important for every trade that you are taking. Don't be lazy. That's why I showed you. Let's do something. Let me come back to Euro USD. Is Euro USD going to say with 500 I should use the same thing? Look at Euro USD with the $500. If I'm ready to risk $10 with my stop loss or my hedging at 20 pips, he said I can use 0.05 lot size. 0.05. But most of us will be using 0.01. You'll be using 0.01. You will now stay long. You will stay long in the market because you are under trading. But for you to do this, you need to understand even the EA you are using. Because if you are using the EA that is using FIBO, if you use 0.05, the next trade, if it's doing martingale, if it's doing 0.05, the next trade will be 0.1 because it's multiplied by 2. So that's why when you want to do this, you are going to be using the fixed lot size system for your EA. The fixed lot size for your EA. If you are using manual, know that you are using your fixed stop. I hope you got this. Guys, this is the very, very important thing that we as traders should understand as we venture into our trading career. Well, because the time, let me see if I still have, my time is almost done here. Okay. Please, if you got what I've just explained, it's a very critical area. If you understand it, it will help you in trading. You will be able to maximize your time in the market. All right. It will help you to maximize your time in the market. So guys, the next thing before we just wrap it up today, we are going to look at, please, I implore you, go and watch this video again. Watch it again, have the understanding of how, get the explanation. If you watch it twice, I tell you, you are going to get it. So we've done a demonstration on account currency, on account balance, the risk percentage, the currency pair. I've shown you that when you trade different pairs, it gives you different risk level. The risk level, what determines your risk is your lot size, the lot size that you are using, and the lot size and the position of your stop loss or your hedging price. Do you understand? So how does this thing that we have done now, how does it psychologically impact you? How does it define your risk? Because you define the risk, how does it help you? I tell you, when you use this, you can be anywhere. You might be trading and then battery quench, your battery goes off or something happens, you lose access. What will happen? You are confident that anytime light comes or you charge, you cannot have losses more than this level. It gives you balanced mind. It will remove anxiety. It will calm you down because you know that you have defined your risk. So if you put, let's say this market, if you use 1%, let's say you use 1%. If you use 1% and the market hits you 5 times, you know that that's just 5% of your portfolio. That's just 5% and you are okay with it. So, ladies and gentlemen, risk exposure rules for you as you start. Because like I told you, on Thursdays, we'll be having our practical class. But I need you, because when we are calling the trade, we are saying enter this, set your stop loss. I want you to have this understanding. You'll be able to set your stop loss as accurate as possible. If you understand this thing, using the EA will be very easy for you. Do you get? Some people are starting their trading career using EA. You know, it's not that it's not good. It's okay. It's okay. But, you know, between somebody that learns driving with manual car and somebody that learns driving with automatic, who do you think could be a better driver? And I presume the guy that started driving with a manual car, because if there's a problem, he can, he can find himself. A person driving automatic car cannot drive a manual car, but somebody driving a manual car can drive an automatic car. So what we are doing in this is to make you understand the manual side so that you can take that concept into the auto. Guys, you need it. I don't have the time. Please, if you don't have the time to learn all these things, you don't have the time to trade. Trading is not yet for you. Go and relax. When you have time, then you can come back to it. Do you understand? So, maximum rate trades that you are taking, you understand it. Your risk at any time, you know what your risk level is and things. So, for the next 7 days, guys, I want you to take your trade. Go on your account, take the trade, calculate your pips. Please, where you have problem in doing it, put the comments in the chat box. in our group chat, I will attend to you. If you're having problem in calculating, in understanding it, put the something in the chat, in the group chat. I will attend to it. Why I want to put in the group chat is that so that others will see it. See, once you know it, you know it. Let's help ourselves. We are in the incubation period now. If we understand it, you get it, it will be easy for you to play with any EA. So in this period, please, I want you to do it. Download the position size calculator from the Forex calculator. Make sure that you calculate your lot size. Do you understand? And maybe we could just help ourselves in the group chats throughout this week as you are taking your trade. If you can put the trade that you are taking and say this is the balance in your account. It might be your sent account and things. This is the balance in my account. I have used the lot size calculator to calculate my lot size. You can do the screenshot and put it in the group. I will see it and tell you whether it's okay. If I'm not there, some other trainers will see it and they'll be able to tell you, okay, this is okay, you are doing it right or you are not doing it right. Take the bull by the horn. Let's work this together, guys. Let's get this together. I hope you all get me. Ladies and gentlemen, I'm so grateful and happy that you are on this call, and I'm sure you get something significant on this call. If you get something here, let me just say you type value. Just type value in the comment section. If you got something here,
waking up at dawnlight, breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise up, we won't fall, breaking barriers through it all. Step by step our journey's clear, success is closer, don't you fear. Challenges we face headstrong in this rhythm.